I'm sitting with 2 decades of mortgage lending experience. If you are thinking about buying a house, or if even buying a house is on your vision board, you're not going to want to miss this. I'm here with Sheldon Clarke, my friend of almost a decade, probably more than a decade, right?
Yeah, sure, absolutely.
Who came and dropped in from Florida. Sheldon is licensed in several states, New York,
New Jersey, Pennsylvania, Maryland, Florida.
And he's here to share some of his tips, some of his insight, what he's hearing from the front lines of mortgage lending from buyers. I know that the market is very tricky right now. We're hearing a lot in the news cycle. There's a lot of fear among people making this investment, which is totally understandable. But we're here to arm you with the tools, information, and empowerment that you need to get you in that house. Because you know what? We were just talking about shoulda, woulda, coulda, never didn't. If you wait, it won't happen. And guess what? The prices will still increase.
Absolutely.
Sheldon, what was your mortgage on your first house that you bought in 2007? The rate?
My rate, the first home that I purchased in 2007 was on 11.125. I bought it 100% financing.
No money down.
No money down. I didn't blink. I didn't even consider the rate. I bought it because I thought it was a good investment, is where I wanted to live. I understood the importance of, owning a property. So, I was pretty young, but I wasn't afraid. I was willing to try, and I'm glad I purchased it. I still own the house.
And how much did it appreciate from 2007? 18 years.
Wow, I would say it's probably
19 years.
Yeah, I would say it's probably just about double in value, and I don't still have the rate. It's not like you're married to the rate. Meanwhile,
I'm married to my rate. I have a 2.875.
Oh yeah, there you go. Yeah, absolutely. You're married to that for sure. And similar, I have a similar rate, in the home I now live in, that, with the 15 years. So it was one of those things that I did advantageously when it was present, and though that rate market, we're probably never going to see.
We're never going to see it. But the moral of the story is, in the 80s, when many of our parents were purchasing houses, or some of our grandparents were purchasing houses, rates in the double digits was the norm, right?
Yeah, absolutely.
12, 13, 14%. But the prices of properties have increased. Let's jump right into it.
Okay.
What are you seeing as the number one concern of buyers in this market? And I would love to hear some of your solutions or creative insight for some of those buyers.
Excellent. Yeah. So what I'm seeing more now, the buyer strategies that I'm starting to utilize more, is the strength of a co-borrower. You're allowed up to 4 people on a single.
What's a co-borrower? Is that like a co-signer?
Yeah, a co-signer. So co-borrower, which means you're 100. I never like to look at the word co-borrower as 50-50. Everybody's 100% in, right? So if you have a co-borrower, they're equally vested in the property as you are. And you're also allowed to have up to 4.
And what is the benefit of the co-borrower, and what's the responsibility? Like, do they need to put money down, or can you just use their income? What are you essentially doing by getting a co-borrower?
Yeah, so the co-borrower can be there for strength and income, to help to build and boost the purchasing power of the buyer or the borrower. It's normally in situations where, I'm at this price point, and I'm not really seeing the things that I like in this price point, and I want to be at a slightly higher price point where those are the properties that are attractive to me. Or, I'm able to pre-approve one person, but maybe the market isn't really presenting much options for them. So the approach to that would be twofold for me. Normally I try to look at multifamilies, because instantly the rental income from the second unit, we can use a certain percentage of that to boost the buyer's threshold. So
part of the pre-approval process, right? The projected rental income for the property they're looking at. Okay.
Correct. So,
you want to be a house hacker, which is a great strategy to get into a property.
Absolutely. But sometimes what I'm finding is, in that same struggle, the 2-family house still might not have the options for that buyer. So now we either have to look at a 3 or a 4, but then you need reserve requirements. Or if the person's just like, listen, I want a single family home, then we have to potentially look at maybe a strategy of a co-borrower who can go on the mortgage with you, that, can help strengthen you and provide more purchasing power.
Are they on the deed as well? And then if you have a co-borrower, how do you remove them from the mortgage down the line?
Great question. So I've done this in the past. Normally when you lock in the property, you lock in the property. So great, right? You have the home, you've acquired the asset. So if we're talking about income that does grow over the course of time, as the person, two ways. One is interest rates drop, houses then become more affordable, right? So you've secured your property, rates can come down, and when the rates come down, now it's more likely that the person may be able to own it on his own.
By refinancing. And removing
the other
borrower.
person. And then secondly, I would say is hopefully there's a perfect storm of rates coming down and that primary individual's income increasing, right? Of course, you still want to keep your debt profile low, keep your credit good, pay your bills on time. But once that perfect storm happens, then you're prepared to then refinance.
Okay.
And at that point, as long as that person is now strong enough to purchase or refinance and obtain the asset solely, then that's what we do and we can remove the co-borrower.
Okay. So co-purchasing, who has parents, aunt, uncle, grandparent who would be willing to be a co-purchaser on your loan to get you some more purchasing power, get you access to more options of properties. I think that's a really smart strategy. It's not something that I ever considered for my buyers, so I love that.
Yeah, 100%. I can think of a scenario specifically where this young lady was dead set on owning a property, and she collectively got, just like what you mentioned, an uncle, a brother, her mom, they all went in together. The house was big enough and she was determined, and I think that's what it really is as well. I think,
where there's a will, there's a way.
Yeah, right. If the dream of home ownership is what you desire, then there's gonna always be a reason why not to. The same way there's always a reason to, if we constantly focus on the why not, then no one would ever do anything. So,
and I think the key though, Shells, is having a team in place that will support your dream. Because
Absolutely.
There will always be naysayers. There will always be people that are not creative, that are not nimble, that are not willing to work with you. You have an agent that's willing to go the distance. You have a mortgage professional that's willing to go the distance for you, to be creative, to make it happen. And this is how dreams are made. This
Absolutely.
is how generational wealth building begins.
Yes.
Let's talk more about these interest rates, right? I'm hearing from a lot of buyers, well, I'm just going to wait to buy when these interest rates come down and when the prices come down. And we know that is not what happens, right? The interest rates come down, the prices go up because people have more purchasing power.
100%.
What would you say to someone that is experiencing that fear or that objection, that they feel that the prices are going to come down?
That's a great question. I think we just spoke about this as well. I think people forget that, they're not the only one buying. I think that's one, and I think sometimes people don't realize that in order to be successful many times in everything, you have to be willing to go against the grain, right? So you have to not necessarily do the common thing.
The road less traveled.
Yes, because you're not the only one saying that, and if that means what it is, we don't have right now economy, although we want to look outside and think the sky is pink and, things are crumbling, and the economy is still virtually strong. So if you take that thought process, know that you're not the only one. And once those things, if that's what you believe, happen, then what does that really mean? The last time the rates fell was more of a housing crisis.
It was a catastrophe.
It was a catastrophe based on the fact that people had mortgages that they could not afford because they were going in stated, pay option arms, all this other craziness. They were over leveraged and properties stopped appreciating as quickly. Right now, the market is essentially stable. People have been building and they have, their ducks in a row. Banks are now pretty compliantly checking. So the security of the market is there. which is why rates are pretty stable, are stably been in this position. So essentially, we're saying that we need a catastrophe to happen in order for rates to really bottom out.
But don't we have a catastrophe? We have a war happening. We have people, there's an affordability crisis. However, I see there are a lot of buyers out there that have been on the sidelines.
Yeah.
We're experiencing a bottleneck because there has been low inventory and a lower rate of building. And for the first time in a few decades, salaries are on pace with the growth of real estate. So now people are able to afford more, and that's because of the tech jobs. So people are making more money.
Remote work has changed the game big time.
That's right. So people can take their New York salary and purchase something in Ohio or Pennsylvania and get a big house. But so there's low inventory.
And that's the thing. It's an inventory. So it's supply. I mean, the rules of marketing. Supply versus demand, right? So if supply is low, demand is high. I mean, things are going to cost more. So unless you're starting to see multiple foreclosures in the area, it's not like that right now. You know, we have a more of a supply problem. Yes, does that still mean that? I think the most important thing for a buyer right now is to strategize. Like, instead of waiting, I think, like you said before, have a teammate so you can strategize. How can I build in a concession? How can I buy down my rate a bit?
What's a concession for those of us that are watching that don't know what that is?
Yes, seller concession. So maybe that's seller funds that can go towards paying down some of the buyer's closing costs or paying down some of the buyer's interest rate so that it can be slightly more affordable. I mean, these strategies to me are far more valuable than just saying, hey, I'm gonna, sit here and wait for it to bottom out. Because if, unless you can live with, what I never bought anything, I don't have anything, I have 3 children, so, and I own multiple properties, and it's a security thing for me. If God forbid something were to happen, I could sell something. God forbid my eyes closed. My kids have some security, my wife has some security, my family has some security that I know that I don't have to necessarily overthink. So I think that those things are of great value when, you're building a family. Now renting is scarier than purchasing, because
you're at the mercy of the landlord's whims if you're not rent stabilized. And real estate is a tangible asset.
Absolutely.
So you'll always have a place to live. You can leverage it, you can rent it, you can refinance it, and it will always appreciate. Like the national statistic every year is 5% that real estate increases nationwide. And in markets like New York and New Jersey, that's different depending on the property type, but it will always increase. The statistics don't lie.
And the most interesting stat to me is the market is made up of 80% return, 80%. So only 20% of the market is first-time home buyers currently, and that age is pushing back. Right. Again, I purchased my first house I might have been 22 or something like that. But I was eager.
Awesome moves. And what year was that?
2006 or 2006. I wasn't even in the mortgage business yet, and I found a way to buy a house. Be that as it may, I took advantage of the way things were structured then.
Strategy.
Yeah, strategy, right? And I think that, again, like me as a young man that was thinking about building and growing, it wasn't something I was nervous about. But why is that changing? As I've been saying, is what does 80% of the buyers who are repeat buyers understand that the first-time home buyers don't? Like, it's not necessarily, it's the same house. It's the market. It's, like these houses most of them are virtually, have had some age. So it's the same house. So why does 80% understand? It's positioning, right? It's understanding of being in the game and how to stay in the game.
Taking that equity and then rolling it into something
Exactly.
else.
You can start a business from your equity. You can, if your business is real estate, great. You want to buy other properties, use your equity, buy others. Now you're Monopoly. Now you're Mr. Monopoly. You start on Baltic, and you go around that board.
Park Place.
You get to Broadway.
Wherever you want to be. There's
and I think that's the thing. I think, now it's like, for me, my first house wasn't Broadway or Park. It was maybe that first purple space, the Baltic.
I always buy those first.
That's the way to do it, and that's the thing. I think the first time home buyers now are almost looking for the first shot to be Baltic. You do not have to be perfect to purchase your first home, and the first home should not, or probably won't be perfect.
There's always a give and take.
Yeah.
There's always sacrifices to be made. It's not going to be perfect, but it will be right for that time.
Absolutely. And that's, again, what it was for me. I mean, that first house was able to at least teach me the game on the understanding of, okay, now I'm going to go do this, I'm going to keep this, and I'm going to rent this out, and I'm going to make, oh, this is making sense. I'm making positive cash flow off of this. I'm going to keep this one.
So smart.
You know, like it's just those little moves that you make that potentially set you up to understand. And that's what I think repeat buyers understand that the first time home buyers are leery about. It doesn't have to be perfect. It just gets you in the game. You know, do you want to sit on the bench the whole time and watch everybody play, or do you want to play
get in
as
the
well?
game? Okay, let's demystify this. What do you need to get pre-approved? How long does it take? Let's break that process down very simply so we can get these people out there and in their dream home.
Right. All right. So I came up with this strategy called the 4 pillars of the pre-approval process. And I would break that down to be credit, which I call the gatekeeper, income, which I call the sword, debt, which I call the shield, and then funds, which are the important part of the puzzle. It puts everything together.
The funds, the bag of money that you bring to the table, or that you get from the bank?
The fund it's great. It's a combination of both.
Okay.
Right? So credit, you know, I call it the gatekeeper because if the credit score isn't where it needs to be, then that's the first thing we need to work on.
Where does it need to be realistically? Give me FHA and conventional.
Yeah, realistically, I would say there are some loans that will allow you to lend down to 580 on a purchase, but I always try to get the person to a 620. I feel like that's the magical number. 580, we're going to be jumping through fiery hoops. Not saying that we can't make it through them, but the process in itself will be a lot less tedious and a lot less, and a lot more geared towards a better experience if we can get you to a 620.
And your rate will be better at 620?
Absolutely. The better your credit, the more rate options you have available, the more product options you have available. So, of course, we would push for a 620.
Okay.
So once I take a look at your credit and you get the gate is open, then I would say the next thing is income. Income is what directly drives the purchasing power.
Now, what if you're self-employed?
If you're self-employed, there are some products and programs out there that we can identify for you. There are some full documented programs if it's the 1099 or, we need P&Ls and tax returns. So there are avenues for self-employed borrowers.
Bank statements as well?
There are some bank statement programs. There's several options for the person who is self-employed.
And then if it's just someone who is employed, what kind of financial verification? Are you talking tax returns?
So normally for me, I try to work with W-2s. W-2s is the primary source. But then if there's some other incomes that you have, like, if you have been in the game and you're a repeat buyer, then yes, tax returns. If you have a rental property that, you're showing the income on Schedule C and so forth. So I would say W-2s are layer 1 of income. Tax returns are layer 2. If layer 1 is strong enough that we can just go with that, then great. Consistency in income, the bank looks at the last 2 years.
So you want to be at your job for the last at least 2 years?
2 years, or at least if you're not at your specific same company for 2 years, at least working 2 years with little to no gaps. And if you do have gaps, they have to be explainable. So my pre-approval process is pretty lengthy because I want to make sure I'm asking you all the questions that the underwriter might ask because I want to get in front of it.
Okay, I'm asking a million questions.
No, you're asking good questions.
What's the difference between a pre-approval and a pre-qualification?
Honestly, if somebody's pre-qualifying you, you should probably just take it, crumble it up, and throw it in the garbage, in my opinion.
Ouch.
I don't think a pre-qual. I'm very serious about this one. Because there are banks out there, especially the bigger brick and mortar banks that we feel more confident in because they're the one that we see on the TV. They'll pre-qualify you based off of pulling your credit and then asking you questions, and then
but they're not reviewing your
documents. So to me, if everything else falls on my documents and not on my words, then why would I want to give you a paper that's formulated on your words? That's pretty much what happened in the first mortgage crisis. But now what happens is, because at some point your documents come in, if there's something that was, oh yeah, I forgot about that. Oh yeah, I didn't mention that. Mm-hmm. Now, you're back to square one. You could be several steps into the process and then it blows up. Now you're financially invested as well as emotionally invested.
Right. I remember someone used their jewelry and fine art as an asset, and the bank would not accept that. Like, great that you have $50,000 worth of jewelry, but that really is not.
Yeah, I mean, and that's the thing. I think understanding the rules of engagement is super important. You know, like, yes, an asset to you is what your asset is to you, but you're saying, bank, I'm going to bring 3.5% and I want 96.5%. You know, it's not. They're going to ask questions. They're going to ask questions. Yeah. You know, I mean, I would think that if you were to ask, if your friend said, hey, listen, I want you to lend me 96.5%, or you're going to lend your friend 96.5% of something, you're going to want to know, well, why am I giving this to you if you're only bringing this? Right. So the bank has every right to ask the questions that they ask, you know. So bottom line is you want to be pre-approved. Now I'm going to ask another question because this has come up in a very competitive market. Do you do underwritten pre-approvals? Yes.
Meaning the pre-approval has already gone in front of the underwriter. You're taking all the steps. Well, I'll let you explain.
Yeah, no, absolutely. I have.
And the benefit of it.
Yeah, I rolled out something called an offer-ready pre-approval, which pretty much underwrites the buyer.
Take notes at this one.
Yeah. We underwrite the buyer because,
what does underwrite mean?
Underwrite means that, you know, we get all your documents, we pretty much create your file and the profile of what you're looking for, and allow the underwriter to take a look at your documentation. So that pretty much, if there is some guessing game there, we can pretty much check the box of the underwriter has seen this and we've gotten to the other side of it. Of course, it's not a full-blown approval because there's no house, there's no appraisal, you know, but at least we know that the person themselves has been vetted even beyond myself. You know, my vetting process is pretty strict, but beyond that, you know, the underwriter sometimes is a great valued asset in strategizing on how to put your offer in, strategizing on, you know, just the unknowns, you know, because there are some things that require another pair of eyes. You know, I have nurses sometimes that work several jobs. They're working at different places, but they haven't always had the consistency of 2 years of 2 jobs or 3 jobs. And we might not be able to use some of it because it hasn't been consistent enough.
Or if someone's on maternity leave, they didn't work the full year.
Absolutely. So all those little, you know, nuance areas, we want to get that in front of an underwriter as soon as possible.
And typically that happens at the end of the process. So there's tremendous value in working with someone who can communicate with the underwriter. Often, no shade to big banks, but often with the big banks, they don't even know the underwriter until you're 2 weeks from closing. Yeah. And typically that underwriter is across the country and they have no relationship with your loan representative from the bank. Absolutely. So having a tight team in place, having the underwriter look at all of your documentation before you even go for that house is extremely valuable. It will save you a lot of time, stress, mental capacity, and it will strengthen your offer. You can really make a solid offer knowing that you will very likely be approved. Yeah. So we got off track for a second.
No, that's
Pillar 1, Pillar 2. Pillar 1 was credit.
Yeah.
Pillar 2 was?
Pillar 1 credit. Pillar 2 income. Pillar 3 debt. You know, so keep your debt profiles low. I normally tell people to try to be around 10 to 30% of credit card usage.
Don't buy anything. Don't buy a car. Don't buy a sofa while you're buying a house. Wait until after, please.
Don't even get clear to close and then go do it. Wait till 100% afterwards.
I had someone, this was a few years ago, who was late on a cable bill.
Wow.
And it totally messed up their debt to income profile. Wow. Their credit dipped, and then they ended up needing to pay more because their rate was higher. So don't make any extreme purchases.
Consult with your mortgage professional at all times. You know, I'm your best friend until you get your house. So many times I'm your best friend even after.
And then he's like your best friend after the house.
I'm the guy who's going to tell you it's the perfect time to refinance. And I would say very important as well is to work with a mortgage professional that's organized. I think that's something that, you know, even myself, you know, thankfully my processor reminds me. Shout out to you, Cindy. I know that you'll probably see this at some point. She always tells me how of the mortgage professionals that she works with, I'm probably one of the most organized that she's seen. And I think that, again, just helps the process to make more sense. I'm a double and triple checker. Like, you know, if you have someone who kind of just pushes things to the side or sweeps them to the left or to the right, they do make the process sloppier and at times more challenging. So yes, the person who is more organized and the person who's a little bit more assertive in the beginning is the one that you want. Like, you want the person who is going to hold you accountable for, when I get documents, I don't want to see fingernails in them. I don't want to see stains in them. I want to see
fingerprints, coffee stains.
Sometimes I'll get the one that's taking the photos and it's like, wait, hold on. Yeah. So I try my best to make, like we're talking about taking your profile and putting it in front of someone who will never know you.
Presentation is everything. Especially with the offer.
Absolutely.
So we put everything in a Google Drive.
Yeah.
So it's very easily readable, no questions. Yeah. That's a really great point. It's the small things that make up
big difference. So to add back to that, I know I went off a little bit but debt usage, debt to income ratio,
30%.
Well, I would say 10 to 30% of credit card usage. Okay. The debt to income ratio is that number that we utilize in order to determine like whether or not someone is qualified. That is the number, right? So it's debt to income. How much debt you have to how much income you have. That's the determining factor of what your purchasing power is.
So quick question. Because I have one for you. What if you're in this process and then you open up another credit card that gives you more debt? Is that better if you open the new credit card but don't use the debt? Or
if you're in this process and we're in this process, you should not open a card unless we've discussed it and I say, hey, listen, in order to get your credit to a better position, maybe you should apply for this credit. And I know they'll tell if someone's marginal and like this is the steps of getting your credit higher, but there's a document that asks if you open any new debt during the process. So we don't want anything new that's going to allow the bank or to ask another question.
Until you get those keys.
Yes.
Okay.
We really, like, the thing that I stress is your profile should be a book that we can open and read from start to finish and understand exactly who this person is. So I try my best in the beginning to put every page in and answer every question. There's still going to be conditions. There's still going to be questions that the underwriter may come back and ask, but we want to, jump in front as much as possible. Like, oh, what about this? Oh, here it is on page 4. Oh, what about there? Like, we want to do our best to make sure that we don't have to go back and forth with the underwriter several times. We want to try to, we want to maybe have the underwriter look at our file 2 to 3 times max. We don't want the underwriter to look at it 7, 8 times. So let's be organized so that we don't have to keep going back, because now the underwriter's gonna be like, oh my gosh, the same file keeps coming up. And just the entire people are people, at the end of the day, an underwriter is not a machine. They're a person. They wanna know that the file that's presented to them is something that's strong enough to say, you know what, I'm willing to.
And are some banks using AI to evaluate or to underwrite?
I don't know if there's an AI underwriter. Maybe they're back there on ChatGPT. That's not to my knowledge. Okay. AI is essentially in everything. So I wouldn't be shocked.
Yeah. Okay.
I just haven't, come across it yet.
And I just want to be clear. If your profile isn't perfect, that does not mean that you can't buy a house.
Yes.
You just need to start speaking with him as soon as possible so he can tell you where you need to be.
Absolutely.
So it doesn't matter if your house is not in order, your financial house. You need to get with your team to clean everything up, make a plan, strategize, because you can make this happen.
Absolutely.
Right?
100%.
No, not every buyer is perfect or well organized, but that's why you start ahead of time to give yourself that runway and prepare yourself, because you can make it happen.
Yeah, 100%. A lot of times people might have that feeling and be a lot closer than they realize. I've been coming across that a lot as well.
That's great. Okay, pillar 4.
Pillar 4, last pillar, funds. So whether you're using down payment assistance or you've been saving, or my favorite is the Susu and the partners, which are more culturally related. But crowdfunding exactly would be
do you need a gift letter for that?
Yes, the gift letter is one of the ways to work with that. Seasoning requirements are the things that we have to pay attention to, meaning that the bank wants to see these funds in an account for at least 2 months sitting there. So there are ways to make those funds usable. It's always, again, just something that you want to discuss at full length with your mortgage professional so that they can properly guide you. And again, the importance is having someone who understands what crowdfunding means and the ways that we do them historically or culturally, and not scared by it, because there are I've heard of some stories of some mortgage professionals that have, pretty much not known what to do in those situations. So yeah, I mean, that's essentially, again, if you take your car to a mechanic and you say, hey, mechanic, fix the car, you allow them to evaluate the car if you're hearing, noises or whatever. So I would say the same with a mortgage professional. You want them to know as much as possible about what's going on so they can evaluate and tell you, how to deal with it. It's
even the bad stuff.
Yeah, I would say
especially the bad stuff.
Yeah.
Get ahead of it.
Yes. Don't try to, again, sweep it under the rug or push it to the side. And, they won't find out. Yes, they will.
And it'll be the 11th hour after you're in love with the house and already planning the furniture.
Yeah, just be honest. I'm a loan officer. I'm not a police officer. I'm designed to help
even though he looks like one. Just kidding.
I'm designed to help you to obtain your dream.
So for instance, if you're getting a gift from your parents, you'll need gift letter.
Yeah.
Possibly maybe it shouldn't be in your account yet.
Yeah.
Before you do anything,
everything has to
with
be
your mortgage broker to see exactly how that should be strategized.
Everything
right?
has to be documented, sourceable. We provide the gift letter. We walk you through the steps. Again, legitimately, the step that I believe that everyone should take is the easiest step, is filling out the application. From there, the person that you're working with should be, and being transparent. Fill out the application, be transparent. From there, everything else can align.
So a walk of 1,000 miles starts with one step.
Yeah, absolutely.
One step. That's it.
That's the truth.
This has been such a great conversation, Sheldon. I appreciate you. Thank you so much for doing this.
No problem.
We're going to leave his contact info in the comments. If you like this video or if you think that anyone that you know would benefit from it, please share it, like, subscribe, and until next time.